I invested $500 per month for 10 years. Here's what happened. I just checked my account and I'm up $186,000 on a $60,000 investment. That's not a typo. That's the actual power of compound interest working while I slept. And here's the crazy part. I didn't time the market. I didn't pick individual stocks. I didn't do anything fancy. I literally just automated $500 a month into index funds for a decade. And what I'm about to show you could change how you think about money forever. So let me break down exactly what happened. Because the numbers tell a story that most people never get to see. Part 1. The setup. 10 years ago, I opened a Roth IRA with Fidelity. If you don't know what that is, it's a retirement account where your money grows completely tax-free. The IRS lets you contribute up to $7,000 a year right now. So $500 a month was totally doable. Here's what most people don't realize. A Roth IRA isn't an investment itself. It's a container. Think of it like a box. You put money in the box. And then you decide what goes inside that box. I chose the most boring thing possible. The S&P 500 Index Fund. Specifically, I used FXAIX, which tracks 500 of America's largest companies. This fund includes literally every major American company you've heard of. Apple, Microsoft, Tesla, Amazon, all of them automatically, every single month, without thinking about it. $500 would automatically move from my checking account straight into this fund. No emotion, no checking the news, no wondering if today was the right day to invest. I set it and forgot it. That's 50% of the success right there. Part 2. What actually happened? Over these 10 years, the market did what it always does. It went up, and down, and sideways, and crashed. Then went up even more. In 2020, the COVID crash happened. My account dropped 25% in like 3 weeks. On paper, I lost $30,000. But here's the thing. I didn't sell. I didn't panic. I actually got excited because suddenly my $500 monthly investment was buying funds. At a huge discount. That's how I made money from the crash instead of losing everything. In 2022, inflation hit hard and my account dropped again. Didn't matter. Kept investing $500. Kept buying low. Then, and this is important, the market recovered. Always does. And every single dollar I invested at the bottom? That tripled in value within a couple years. So after 10 years, here's the math. I put in $60,000 total. $500 a month. 120 months. That's just money I chose not to spend on other stuff. My account is now worth $246,000. That means the market added $186,000. For doing absolutely nothing. For not picking stocks. For not day trading. For not watching CNBC. That's $3 earned for every $1 I actually invested. Part 3. The real lessons. First lesson. You don't need a lot of money to get rich. $500 a month isn't some crazy amount. Some of you spend that at restaurants. Some of you spend it on subscriptions you forgot about. I just moved that money to an investment account instead. Second lesson. Consistency beats timing. The moment I thought I was being smart and didn't invest 1 month because I thought the market was too high, that was the wrong call. The market kept going up anyway. Instead, I should have invested. You know what beats trying to time the market? Just investing every single month no matter what. Third lesson. Boring is beautiful. I didn't use Robinhood to trade meme stocks. I didn't try to pick the next Tesla. I just bought a fund that tracks 500 companies. And I beat 90% of professional investors who've been doing this for decades. The boring S&P 500 index fund did all the work. Fourth lesson. And this is the one that keeps me up at night. I'm only halfway done. I'm not retiring tomorrow. But I've got another 20 or 30 years ahead of me. That $246,000? If I do nothing but let it sit there, it'll become $1 million just from compound interest. If I keep investing $500 a month for the next 10 years, we're talking about over $1 million in actual contributions becoming $5 or $6 million. Call to action. This isn't motivational fluff. This is just how math works. And math doesn't care about market conditions. Math doesn't care about your background. Math only cares that you start now instead of later. Open a Roth IRA. Pick an index fund. Set up automatic monthly investments. And then come back in 10 years and check your account. If this video showed you something you didn't know before, please hit subscribe. New videos every week about making money actually work for you. Thanks for watching. Now go make yourself rich. It's easier than you think.